So we hope you're enjoying your lunch so far. We're going to get started with our next guest speakers. Whether you've been in the space business for a long time or whether you're new to it all, there's no denying the fact that our industry is in the midst of a major renaissance. And nowhere is that transformation more evident than in the growth of private investment in space technology and research. In 2018 alone, venture capitalists poured approximately $3 billion into space technology companies, and it's expected that that'll continue to grow. Few people know more about what's driving space investment than our next panel. We have Robert McCooey, Senior Vice President of NASDAQ's Listing Services, to moderate this panel. Robert is NASDAQ's Global Head of Capital Markets and a Senior Vice President of NASDAQ's Listing Services Unit. He's responsible for NASDAQ's relationships with the financial sponsor and investment banking community. Additionally, Mr. McCooey manages NASDAQ's new listing efforts through the Americas and Asian Pacific region. Please give a really warm welcome to Robert as he comes on stage with the panel.
As I said to our panelists, that I won't do any of them justice if I try to do the introductions, and so I'd rather have them introduce themselves. So why don't we start with you, Justin, but introduce yourself. I'd like to have you tell everyone a little bit about your firm, your interest in the firm's interest and experience in investing in the space, and why you agreed to be here today.
Absolutely. Thanks again for having us here. Obviously, a wonderful event. As always, I was a speaker at last year's panel as well, so if any of this is a retread.
You must have done well.
Yeah. Just want to thank everybody for your time and listen to us. So I'm a senior partner at Apollo Management. We're one of the world's largest private equity funds. We've been investors in the space sector for multiple decades now. We tend to be later stage investors than pretty much the rest of the panelists. There's probably a barbell where Chad and Space Angels is very early stage and we're very late stage, but we still find reasons to talk and compare notes and discuss ideas. And I think that's really part of we all have this role of fostering the space ecosystem and allowing new opportunities to come to the surface. And so it's obviously a personal passion of mine as well. Also just we feel very good fertile ground for investment opportunities over the coming years, just given how much opportunity and economic development there is to be done in space, and those investors that are smart and get up to speed early are going to really have a great advantage in doing so.
Chad?
Hi, really happy to be here also with this panel in particular. It's great to get a whole group of us together that really spans all aspects of investment because, we've been operating in space for decades, and so there's a lot of existing infrastructure as well as new entrants. So it's good to be here. I'm Chad Anderson, CEO of Space Angels. We are a venture capital fund that's focused on early stage space companies. So we focus really on seed and Series A. What that means is that we're often the first check into a company. And then we do a lot to support the growth of that company, helping it get to its next phase of its development. And then we work with some of the other panelists on this panel who would then take over and help that company grow further.
Marshall?
Yeah, Marshall Hawks. I'm a managing director at Silicon Valley Bank. So we're a commercial bank. We're not a investor per se, but we're the 800-pound gorilla in the tech ecosystem, if you will.
You're kind of like a merchant bank.
To a degree.
Right?
We're probably most uniquely known for the fact that we lend to companies in addition to being their bank at the earliest stages of their life cycle. So two guys, two gals, dog garage phase of a company is where we tend to start getting involved and helping lend all the way up through companies going public and being standalone public entities, hopefully on NASDAQ. And we have a frontier tech group that focuses on aerospace. We work with a lot of portfolio companies of the folks on the panel here from the banking perspective and from a lending perspective.
Thanks for being here. Mo?
Hey everybody, Mohammed Islam. I'm a general partner at DFJ. Recently rebranded the early stage fund to Threshold. We also have a growth stage fund as well. $5 billion AUM, assets under management, and we were early backers of Planet and SpaceX, and so I've been super interested in the space sector for a while. I lead our frontier tech investing, and excited to be back here. I was here a couple of years ago, and I think the ISS does great work with our portfolio companies, and excited to see what other new startups. I'm joining a panel later this evening. Excited to see some of the early stage companies here as well.
So when you and Justin were talking, it kind of reminded me something I think a lot of people miss, which is the fact that when you do your investing, as well as Chad too, you're doing it on behalf of institutions who are doing it on behalf of individuals. Talk through that. Talk through how you think about the fact that, you know, it's not just Apollo, it's the LPs and then the actual retirees, individuals, you know, within that fund that are going to get the benefit of it. Because when I sit and hear the talking heads on a lot of different topics, they seem to miss the fact that the benefits of investing in any industry actually accrue back to individuals.
Yeah, I think that's an excellent point. You know, as you mentioned, we are as an investment fund, what we do is we, have investors who invest in our funds, and then as the general partner, we then make investments directly using primarily their capital and a little bit of ours to ensure that we have skin in the game, obviously. I think all of us investors take that responsibility that we have for our investors very seriously. Apollo's LPs are pension funds, sovereign entities, and charitable organizations and other groups that, that it's really important for them to not only have that money and preserve it, but to grow and meet return thresholds so that they can, fund their needs going forward. So I think a big misperception, people get is, well, why doesn't a private sector investor do this, or why doesn't a private sector investor do that? We need to take risks because risk is how you get return, but we need to take calculated risks that we understand and are comfortable with. And we all pretty much have very interesting guidelines to follow to make sure that we're taking the type of risks we can so that we can get the types of returns that our investors not only want but also need. And what's really interesting about that is we all come at that profile thinking about our investors and our skill sets, determining how we want to invest. And that kind of then forms a pattern of, well, we'll invest in things at this certain stage that look like this and look like that. And then, Space Angels and DFJ will have their own rubrics of we'll invest in some things this stage and looks like this. That doesn't create a straight line across. They're what we call in the market valleys of death, where a company that looks a certain way and performs a certain way could be very promising, but it's not necessarily a great fit for a large pocket of capital. And so that's oftentimes where it's always useful for the government or other third parties to come in, or for, frankly, one of us to think about how do we adjust our rubric or our landscape so we can take advantage of that investing opportunity that other people aren't.
Or they can come to Marshall, right? Right there in the middle, right? I mean, when they're going to come to you because they need financing, and they might be too big or too developed for DFJ or for Space Angels, but they're far away from being an investment opportunity for Justin.
Yeah,
right?
I think where Silicon Valley Bank plays and where we tend to lend to companies is kind of on the heels of certainly Chad already being involved, or maybe in conjunction with someone like Mo at DFJ coming in, and then we probably get across the point where Apollo would be interested. I mean, where we get comfortable lending, probably the place where we start to say, particularly in aerospace, other than us maybe underwriting to the fact that we know the investors and maybe trust them and their portfolio companies, and their ability to get their companies funded. When we're looking at the merits of an aerospace company, I think the big thing that we've been spending a lot of time on is just how really the industrialization or commercialization part of it, what kind of traction do they have there? Do they have contracts, a contract, multiple contracts? Kind of what does the pipeline look like? And a lot of these companies have been able to get to a lot of the ones that are of size, Planet, Spire, Orbital Insights, others have large contracts kind of there. It doesn't necessarily need to mean revenue, but they have a line of sight to the customers who will be buying their product whenever it gets viable.
And I want to just wrap up this line of questioning on with Mo, because you mentioned SpaceX, and I did a quick interview earlier, and somebody referred to SpaceX as Elon Musk's pet project. And that's what got me thinking about this, is the fact that, I mean, people see that from the outside, but you've got a lot of money in there, and a lot of others. Valor in Chicago has a lot of money in there, and on. There's people who are dependent upon that success.
Yeah, no, I mean, it may have started as a pet project, but now become a huge $33 billion company. You know, I think Elon's desire to want to go to Mars, that's what's inspiring. You know, when I briefly worked at Lockheed Martin earlier in my career was when I was an engineer, and when I compare what it is like there to what it is like at SpaceX and what they're trying to do, it's just a world of difference. And I think it's closely partnered with NASA and ISS is what is kind of propelling humanity forward. And I think that's what's inspiring both to the people that work there and to the investors. And that's why we sort of took the risk there. Elon effectively led the seed and Series A in SpaceX himself, putting huge proceeds from having sold PayPal to eBay back in the day. And so he was already a really successful entrepreneur. I had spoken to Tom Moeller, who was one of the early real rocket engineers at SpaceX, and I think when Elon had called him up, it was, I'm an internet billionaire and I have this idea about how we're going to go to Mars. So crazy beginnings, but it's come a long way. And I think they have obviously have a real launch business now, have demonstrated some amazing things with the Falcon Heavy, for potential deep space applications later. And so it's a company we're super excited about, and we've actually continued through our growth fund and continued to put in money even in later rounds.
Good. So Chad, I want to bring you in to the conversation. For the benefit of the space entrepreneurs in the audience, what makes a space idea investable? And have the criteria for that changed over the past 2 or 3 years?
I think it's probably the same thing that makes any company investable. Having a product or service that you can sell for, that people want and are willing to pay for at a price that's higher than it costs you to provide it. It's pretty much, that's the nuts and bolts of it. It kind of builds on your last question about knowing your investor and knowing their motivations, understanding that NASA, when they're putting early money and seeding some of these early companies, that they're focused on the technology development, or trying to get something, or trying to accomplish something technically. From a private capital perspective, we're less interested in technical risk. We want a lot of that retired, and we're looking at market risk. And so for us, we're looking for entrepreneurs that are going after a big market opportunity, and something that probably wasn't available or wasn't in a market opportunity maybe even 6 months ago. Those are often the most interesting. The ones that the market is growing and evolving, and as it matures, suddenly there's an opportunity that wouldn't have made sense 6 months ago because maybe the supplier wasn't there, or the customers weren't ready, or what have you. And so really timely opportunities, big market opportunities. In space, it's really unique in that you can look at existing industries like satellite and launch and reimagine them, so you don't have to start from scratch. There's obviously some interesting things happening in new markets as well, but the thing to keep in mind, again, like talking about motivations and knowing your investor, at the earlier stage, we're going to have probably a different answer to this question than most of the people on the panel. Investing is a mix of art and science, and the earlier you are, the more of an art project it is. Later stage, when the company's been operating for 7 to 10 years, they have a lot of revenue, they have established practices and processes in place. It's something that Apollo's looking at. Apollo has very scientific approach to valuing this company and understanding what it's worth and what they're willing to pay. When we're the first check into a company, they might have no revenue. They might have a little bit of revenue, but what we're really investing in is the dream and the what we believe the opportunity to be, and that the team is the right team to be able to pull this off. And also knowing that, especially if it's in a new market or doing something in a new way, that getting from point A to point B is not a straight line, and there's going to be lots of twists and turns along the way, and that this team is the right team to be able to manage that. So.
Yeah, one of the interesting things about the space investing sector in general is that I completely agree with Chad's articulation of art, and science and a gradient. This is one of those industries where a company can go from very early stage to very late stage pretty quickly, right? Because they're coming up with ideas, they're working out a proof of concept, and then all of a sudden they get some large NASA or other government contract, which automatically means $100 million of revenue, which means they got to scale up, right? And they need to build factories, or they need working capital, or they need 50 more people, and all of a sudden you need to flip from that art rubric to that science rubric and try to figure out almost a combination of the two. And so that's why you see a lot of dialogue across various stages of asset class in this sector, and why I think it's important with people who are building their companies to establish relationships with early stage, middle stage, and later stage investors, just so that people have a knowledge of who you are, an articulation of what your business does, and they can track and understand that over time, so that if you are fortunate enough to get that very large juicy contract, you're actually able to fulfill it.
I think that's one of the interesting places that you sit, Marshall, right? Which is you see everything that goes across this timeline. There may be valleys of death in there, but if someone came to you, you would be able to say, okay, this is where you fit. Maybe this is who you should be talking to.
Mm-hmm. Yeah, it's certainly a place that we get the benefit of being a bit of a Switzerland, so that we bank most of these portfolio companies shared across the panel and others, and we try and help either with our own capital or helping them navigate, if we can, to the right people who are going to be willing to invest at the stage that company is at. I think that's something that we've sort of been watching. We work in the broad venture ecosystem, so one of the things we've been talking about actually before getting up here is the number of different credible venture funds that we work with, broadly speaking, who are now willing to invest in aerospace in the frontier tech world. DFJ certainly been there for a long time. Chad's been there for a long time. Apollo, but there aren't that many others of the kind of what we would call name brand venture funds. It's been increasing the last several years, in particular, as people have watched what SpaceX and others have done. But that's something we try and help portfolio companies navigate, or help an entrepreneur who only does a couple of fundraisers in their lifetime. Find the right people. Whether they ultimately get money or not, that's a different question.
So Mo, based upon what Marshall just said, is it more difficult today than it was 2 or 3 years ago to find investment ideas? Is there more competition? Are people coming to you? Do you have to seek them out? How does that work?
I think Chad might have mentioned this earlier in our meeting with the administrator, but since 2009, sort of when SpaceX, I think had their first successful launch, there's been $22 billion of venture capital coming into these new space companies. And we've actually seen more and more, traditional Silicon Valley investors start to invest in these companies for the first time in the last 3 or 4 years. So it's actually been great. There's more people to the party because, something we always think about as early stage investors is financing risk for our companies. So kind of follow on investment because, we usually like to come in early, Series A, be the major lead investor, join the board, kind of help scale the company from there. But obviously you need more capital, especially when we're talking about some of these companies that will need potentially hundreds of millions of dollars over time. And so I think one, it's great. We're seeing a lot of traditional Silicon Valley investors get into this space, and it's encouraging more and more companies getting started, which I think is phenomenal. And now you have platforms like the ISS, like lower cost of launch, that there's 100 different dedicated small sat launchers now. So I think it's making it easier to send stuff up as well. So I think it's great. We're seeing a huge growth in the entire ecosystem.
So Justin, with more of what's happening kind of downstream with Chad and Mo, tell us how that helps you.
Yeah, it's great. There's a lot more volatility, I'd say, in the sector than there has been traditionally. I think historically most of the space activity, with the exception of the space station, was happening in geosynchronous orbit, and you've seen much more activity lately in low Earth orbit as launch costs have dropped. People often talk about, I don't know if people have heard the concept of the peace dividends from the smartphone wars, which is basically, everybody carries this little supercomputer around in their pockets now, and the kind of process of making that cheap and available has dropped dramatically the price of sensors and energy storage and communications and all sorts of various componentry, which can then be applied into other markets such as obviously space. And so this has created a lot of opportunity, a lot of feedstock to create new opportunities. So you're seeing a ton of different things being thrown out there that are potential opportunities. I actually think the job is harder for the earlier stage investors on this, because they're the ones who need to sort through all that and determine, which ideas are really interesting and which aren't. We have it a little easier because we know that they got to win a real contract and be vetted out by a DARPA or a NASA or somebody else. And then that means that the product is probably pretty good. I think to piggyback on what Mo said before, you kind of have this interesting interplay with, an industry, some new applications come out, and then you get a whole bunch more investors invested there, and then there's more people doing, starting companies because there's more investors there. That is not a linear trend. It's actually very bumpy. And you'll see times in the venture market where all of a sudden a ton of money will flood into a sector where there's maybe not as many actionable ideas, and you wind up with these interesting peaks and valleys of whatever's hot at the moment. And in the past 10 years, virtual reality had its moment, cryptocurrency had its moment, AI.
What, that moment's over?
And who knows, right? You never know until afterwards. And a lot of that is predicting the past. And so, I think it'll be interesting to see. I feel that space will have one of those moments over the next 5 years. But I think that's going to be, there will be a lot of winners and losers as a result. But in the long term, that's a great thing, because you need that flood of money chasing good, bad, medium ideas where kind of people are allowed to take a lot of different risks and really kind of sort things out, because none of us can really know which technologies are going to align at the right times.
So Chad, remind me, how many companies in your portfolio?
30.
And you're investing how much? Between what and what in the companies?
$1 million to $2 million.
Okay.
Yeah.
Do you look at your space, it's always been amazing, we talk about space all the time. Do you look at your investments in the same way as some of the investors in, say, biotech do? That some of yours are going to be binary, they're going to be just absolute blowouts, and others are just going to be a zero?
I don't think that's, I hear that analogy a lot. I don't know that it's that applicable.
Good, I'm glad you don't agree.
Yeah, no, there's certainly some nuances in space, right? So going back to looking at entrepreneurs that are resourceful, there's a ton of government money, especially at like the early SBIR level, seeding early technology development and early ideas. The best entrepreneurs that we've found are actually the ones that are resourceful and able to find that money and go out and do that, come to us for a seed check when they've already retired the technology risk. They've got maybe a working prototype, and they've got some early customer traction. They've taken that prototype and have gone out and talked to customers with it. So in a lot of ways, the companies that we're seeing at seed are de-risked relative to other venture type investments. And I hear some other common misconceptions. So this may be a fun one to talk through, but that space companies take a lot of money. Venture doesn't invest in them because it's too capital intensive. Well, that's just because we're thinking about the way that it's always been done, and also we're probably thinking about launch companies. If I see a pitch deck come across my desk and they say, invest in us and we'll have, we'll be launching rockets in 10 years. You're like, yeah, it'll take you at least 10 years and it'll take you hundreds of millions of dollars. And so, but space is very broad. It's horizontal. It cuts across a lot of different industries and sectors. And so space as a whole is a much greater investment thesis than launch. So it doesn't take as much capital as people often think. It's less risky than a lot of people think. Companies are often generating revenue earlier than general technology and general venture investments, in the sense that a lot of the companies that you see that are getting venture money are out trying to build user bases, and they're getting venture capital, and they are going to, at some stage in the future, figure out how to monetize that user base. In space, the companies are generating revenue a lot earlier. So in a downturn, there's actually a lot more protection some of it's hardware, some of it's revenue and customer contracts that you can fall back on. So we're really intentional about our portfolio construction. We don't concentrate in any one thing. We invest across the space spectrum. And we're not just hardware. We're doing software and hardware, and we're being, trying to be really smart about how we build that portfolio. But no, I mean, most of the companies that we're investing in hit a really high bar in that there's lots of ways out of this company. Mm-hmm. And I'll probably finish that thought with the question that we always get is, and another common misconception is around exit and how it takes a really long time to make any money in space. And again, this is all sort of relatively new, this whole entrepreneurial approach to space, so we have to see how it all shakes out. But there are a number of the companies that we're looking at now, especially in the Earth observation space, have a real shot at a public offering. And
glad to hear that.
Yeah, and that is our expectation for them. And it's deep tech, it's high tech, and so they're obviously going to be going on the NASDAQ. So, but that is our expectation of them. And there is obviously a couple of other exit potentials. One is being acquired. Most people think, oh, there's a bunch of incumbents with sitting on a lot of cash, and they're going to buy up these companies. But that's actually our backup plan. Often those aren't the best outcomes from an investor or a company perspective when those acquisitions happen. It's not always the case, but that's the backup plan. And so given that there is money that's really willing to acquire, and we can get a 2 or 3x on our money as the downside is pretty solid. Selling your company to a tangential tangential market, let's say like Google or an Amazon or something like that, like now you're talking about like some solid acquisition returns. So there's 4 misconceptions about space. Hopefully that helps.
So maybe I'll
I was going to actually come to you, Marshall. I want to talk a little about funding, but if you have another point.
Well, I would say the life science analogy or the medical device stuff, I'll take it from a different angle. We actually do talk about aerospace and frontier tech within Silicon Valley Bank's walls that is akin to, and we have a life science practice as well where there are some binary outcomes. We don't talk about it from the binary outcome angle, and I agree with Judd, it's a little bit less binary than that world, but we talk about the difference between real risk and perceived risk in these companies. So what I mean by that is most of the companies we see in aerospace, a lot of what we would consider their intellectual property, the value of the company, is usually developed well ahead of, even if revenue comes faster, ahead of revenue and other financial indicators that you might use that we even use in enterprise software and consumer software and other things where you could look at that as an indicator of success. So what that does for us is allows us to think about lending money to those companies earlier on in their life cycle because they've put a, multi-satellite constellation up in orbit, or they have built some really, classical intellectual property that is more akin to the life science world. And in life sciences, you have companies that go public with no revenue. I'm not sure that's going to happen in aerospace just yet, but I think we kind of view it a little bit along those lines where a lot of the actual intellectual property of the business is done ahead of, the revenue is really a lagging indicator of, IP in the business and how well they're doing.
Right. So let's move to that to talk about funding. You're at ground zero on funding. What do you see as the trends? What's been happening so far in 2019? What are your colleagues saying about what the trends will look like in the next few years? Mm-hmm. Will there be more money, less money? Is it going to be concentrated, more diverse coming into the space?
Well, I'll start and the rest.
I want to start with you because I think you're really the nexus of it.
Our frontier tech group, I'm trying to think, year to date, something like $3 billion of capital's come into our collective portfolio at SVB, of which we probably cover 80-85% of the aerospace companies that are venture-backed. It's a greater number in that vertical versus broader venture capital land, where we've got about 55% of the venture-backed companies in the United States are portfolio companies of ours. It's one of the fastest growing areas. The two probably sub-niches that are jammed with lots of either, this flood of capital coming in and some follow-on companies, maybe copycat, maybe some great companies in there. It's around launch vehicles and getting something into orbit, and then kind of a variety of kind of CubeSat companies with a variety of applications. Those are the two areas that we've seen kind of the fastest amounts of capital, the largest amount of capital being put to work.
Mo?
Yeah, I think in the first couple of quarters, there's already been several billions of dollars of investment. Some of that has been follow-on investments in SpaceX, and then also Blue Origin. Jeff Bezos has been bankrolling and will continue to do so. But we've been seeing a lot of activity. There's a lot of new companies getting started. There's some areas where I generally tell entrepreneurs maybe it's not a great time to start a company now, like in terms of another launch company, just because there's 100 already working on the small launch market. But space tourism, companies that are working on adjacent technologies like 5G and additive manufacturing to reduce complexities and weight of things that are going to go up. We've seen a lot of interesting things come out of alumni of some of these companies. But I think it's going to be fascinating. I agree with Chad. I think if you have a pretty broad thesis, there's a lot of different ways to kind of make investments in this area. There's a lot of software-only companies that are just analytics on top of Earth observation data, and there's probably a huge company to be built just doing analytics on that. And so I think probably some of the most valuable space companies, 20 years from now, haven't even been built yet. And I think that's the thing that gets us excited and constantly wanting to meet new companies.
Well, I guess that's the reason why I guess Goldman and Morgan had $1 trillion
right.
worth of capital invested in the space within the next 15 years, and I guess BAML had that at $3 trillion. So,
wow.
I guess if you want to go to BAML for your funding after you're finished with Silicon Valley Bank. Justin, we can tell that you're enthusiastic about it, not just because you got invited back again this year, but when you go into your partner meetings, is it arm wrestling for you to get more money, or are they as excited as you are?
No, I'd say people are very excited about space at Apollo. Like we've said, it's a sector where we've made a lot of money historically over a number of decades, mostly in the satellite space, but nevertheless, people are familiar and understand the investment thesis. And so I think a track record really breeds a lot of excitement and familiarity with what we're doing. I think that per Chad's point too, kind of later stage investing tends to be more of a science, more of a cash flow oriented methodology as opposed to an art. So it's less of a convincing, because the nice thing about the space business is that most of this is recurring revenue or contracted base when we come in. Now that is kind of, to your point, the reason it's not an arm wrestling match is because I know what to bring to committee and what to not bring to committee, and what I like is the things that are going to do well at committee, right?
Right.
So we are just, it's not in our DNA. I am not a scientist or engineer. I can't make the decision of which of these 4 Earth observation companies has the best technology, but I can know that this one just received the contract, and so it's worthwhile to underwrite their next few launches, right? That's a much more straightforward, I guess, way of investing. So
And de-risking your investment.
And de-risking, exactly. And so I think this concept of de-risking, I think, is incredibly important for this panel, but also this room, and frankly this conference, because I think the wonderful way that public-private partnerships work is when the government is doing some of that necessary de-risking to make it easier for the private sector to come in and expand these markets. And piggybacking what Mo mentioned of certain markets are very saturated. There's a lot of money and a lot of entrepreneurs chasing. No surprise, they're the ones where there's already a stated economic benefit if you're successful, right? And so launch, Earth observation, satellite comms, things like that. What I think is so crucial about what the ISS National Lab is doing right now is building that pathway to allow the same thing to happen for space or low Earth orbit manufacturing. Because as soon as we have 1 or 2 category killers or minimum viable products of things that can be manufactured in space and to a much higher level of fidelity or quality than you can on the Earth's surface, capitalism will take over. Investors like us will be stampeding to figure out how to fund those companies, and it'll make a great, story and a great economic expansion and expansion of space infrastructure and exploration and everything else that I think everybody in this room is passionate about. And so really, that's the reason I'm here. That's the reason I'm sure all of us are here, is to lend our thought and assistance and any sort of help we can to that very important mission, because we know as soon as we reach that tipping point, capitalism takes over and, a lot of great things will happen.
Great. So I want to bring Chad back into discussion and jump off of the whole topic of infrastructure. So when you see these companies and they come in hundreds of pitch books across your desk, what gets you excited? I'd love to hear an example of one that you said, wow, they came in, I didn't understand it in the beginning, and they were doing something in infrastructure, and then I said, I get it, and now I see what the amazing market opportunity is for this company. Told you I wouldn't go with the questions that were on the sheet.
No, that's good. I don't know if I can answer that exactly in that way, but certainly there is a lot happening. We've seen the barriers to entry in space come down, and with that, we've seen this wave of entrepreneurship and innovation. Almost 500 companies, entrepreneurial companies, have equity backing in the last 10 years. $22+ billion going to those companies. So there's a lot happening really, really quickly. What's important for us in trying to make sense of what's a good investment opportunity now, because I think like everything in life with investing, timing is everything. Knowing what is the opportunity now, and we're on our second fund now, and in our previous fund, we had quite a bit of launch exposure. And getting into the right small launch vehicles was really important for us, and I think that there's a huge opportunity there, and we're just starting to see that play out, and it will continue to play out. With our new fund that's launched 18 months ago or so, we don't have any launch in it, and we probably won't. Right now, what's really interesting is the Earth observation value chain being reimagined. So again, we know that there's a lot of people that are willing to pay for this. And the way that it's been set up and the way that it's been done has been really limited by the fact that you've got a few suppliers and one customer, the government. And if you really want to blow this market open, and I'm not talking about like Earth observation going from $3.5 billion today to $5 billion in 5 years, like that's not exciting for us. What's exciting is when you you say, why would you do it that way? And you leverage our learnings and our innovation in other sectors, apply it to something like Earth observation and completely reimagine things. And so one of the first investments we made out of this new fund was in a company called Skywatch. And when immediately when I heard and I've talked to a lot of companies that are in the data analytics side of things, a lot of glorified consultancies, consultant model, but really just kind of doing things incrementally better. I've seen so many pitches like that. This one was fundamentally, no, we are source agnostic. We are a data aggregation and distribution platform, and I won't go into all the details, but essentially what it's allowing is now for people who don't know anything about space to tap into an API and get access to this data. It fundamentally changes things, right? So immediately I knew that there was an opportunity here. Immediately it was like, wait a second, is this too early for the market, or is now the right time for this? And so opportunities like that come about really just because I think we're out looking at the opportunities here. We know the gaps in the market, and when we see something that fits that gap, it's really easy for us to jump on it and get excited about it.
Well, it seemed like a company like that touches the consumer, so I could check it out and see interesting data that's on there. Financial markets, obviously, I'm sure there's a lot of data in there that hedge funds and other investment managers would like to understand. And then than this market, right? I mean, people would say, wow, if there's such a big market for that, then there are probably ancillary markets that are opportunistic for us to be investing in too.
Without a doubt. The markets that are interested in this type of data are enormous. I mean, so we're figuring it out now by the demand that's coming in, but it's industries like agriculture and oil and gas and asset monitoring. I mean, these are huge markets that if you actually give them the data that they want in a format that makes sense to them, and you remove the barriers to accessing this data, which were huge, legal, cost, logistically, like it was really difficult to get access to this data. If you make it really accessible through an API, all of a sudden you've got all of these new companies that are coming in that understand these agriculture customers, these oil and gas customers, and they're developing the AI and the ML tools that are servicing those customers in a way that the people who are developing satellites never could, right? So this is what I'm talking about when the industry starts to mature and you start to see specialization and you start to see the people who really understand who their suppliers and their customers are, and this is how we start to see this exponential growth.
So Mo, I'm going to jump to you off of the questions I asked both Chad and Justin. Do you have to arm wrestle internally to get funding for these kind of projects?
No, this is the kind of stuff we're excited about.
Give us a good example of one that DFJ did.
So they're
besides SpaceX.
Yeah, we'll leave that one aside. There's a recent one we did that's still in stealth. We were talking about 5G earlier. 5G company, potentially 5G over satellite, being able to serve sort of underserved rural markets, and then also potentially aircraft. And so, I think for these types of deals, we have a team of 5 partners, so we keep it small, and we do that intentionally so we can make decisions pretty quickly. And 5 to 7 has generally been best team size for us. And so, some of my partners come from enterprise software backgrounds, some of them have come from consumer backgrounds, but we do a bunch of work up front to make sure everybody can kind of understand, okay, what are the technical risks, what are the product risks, what are the market business risks we're taking here, and then how does this capital that's coming in help de-risk this company, and then how do we bring in additional capital over time. And something I think Chad had mentioned earlier, time to market, timing has always been key. With venture, even if you're right, if you're wrong on timing, you're wrong. And so, a lot of these ideas that we've talked about, people have thought of before. It's just timing has been right now, and that's why we're seeing them kind of emerge. So in that case, we just saw a bunch of things come together where the right teams were working on the right problems, and we thought we could add a benefit coming from SpaceX and Planet, where we could get them connected to the right types of folks in our network. And then, since we come in early, we're leveraging some of those folks in our network to help us do the technical due diligence as well. I used to do some of this when I was at In-Q-Tel. I was a technical staff there, but now, I've been in finance too long, so I've lost the engineering chops. So I have to, work with other folks to help me do that. But those are the types of things that we get excited about, and I think it's going to be pretty phenomenal, especially in terms of new areas. I think telecommunications is one that we're pretty excited about. SpaceX is obviously doing some things with Starlink, but I think that's $1 trillion market opportunity in space. Whether it's deep space networks, just internet broadband. If you think about the next 3 billion people that are going to come online, I think there's a huge opportunity there. I think it will be capital intensive, so I think it'll be a mix of big companies and then also small startups, whether it's relay satellites, things like that, kind of filling in the gaps. But I think that's a big opportunity. So that's sort of how we think about it. There's a million different ways a business can go wrong. Most startups fail, right? So what I tell entrepreneurs is sell us the big vision on, if this works, how can it be big? And that's what we care about.
And when you say it's capital intensive, that's when Justin's eyes go wide, as well as I'm sure Marshall's, because they're the ones who are going to, Silicon Valley Bank, you're going to be the ones who are going to help those companies to find the right source of capital and the right capital mix. So without naming names, we know DFJ is focused on the sector. What have you seen in the past few years? More of your traditional Silicon Valley Bank customers and those venture firms looking at space, getting involved, raising? Are there any funds that have been raised specifically in the venture community besides Space Angels? Well, of course, we have the number one here. I mean, this is the ISS conference, and we're at the number one fund.
We were actually talking about this over lunch ahead of the panel, that I think DFJ Space Angels are great examples of people who've been in the space, no pun intended, for a long time. Increasingly in the last 2 to 3 years, Mo made the point earlier, we've seen a lot of the more brand name investors in Silicon Valley that been around for decades, and we consider people who are very smart, at least in their respective fields, kind of dip their toe in the aerospace ecosystem. Andreessen Horowitz, which is one of the best funds in the Valley, put and led around in a company called Astronis, doing kind of high-speed broadband and geosynchronous orbit. Sequoia Capital's been in several recent companies, Orbital Insights, which is kind of a similar kind of dynamic where they're pulling in lots of data from lots of players, trying to be a Bloomberg terminal, if you will, for space information. And those funds in particular hadn't really played in aerospace really at all, or certainly not in any frequency until the last couple of years. I think it's because you've seen a couple of really good, ultimately they haven't really turned into complete outcomes yet, because SpaceX is still a private company. You've had a few good M&A exits, but people see that that's going to happen for some subset of the portfolio. And so these broad money managers who are really good at allocating capital have said, hey, we need to be a participant in that vertical.
I think another important, I think another important point to make about the VC landscape is that both Wall Street and Silicon Valley / San Francisco are full of very smart people, but there is very much often a herd mentality which overtakes a large part of that population. And when it comes to the Valley, the great majority of VC investors are primarily or only looking at software subscription businesses or maybe consumer products. I mean, that is where people are spending their time. It is much more of the quote-unquote easy button. You're looking for, all right, you had this amount of customers last month, you have this amount of customers this month, I can track that, I can build a graph, and that's what my investment thesis is going to be built off of. There is what we are talking, you're getting a very misrepresented sample set of the entire VC landscape, because most VCs are not willing to put in the time and energy that people like Chad and Mo, and obviously Marshall on the lending side, are willing to do to dive into an ecosystem as complex and three-dimensional as space is. And so, whether you call that the kind of deep tech group, the space mafia, it's a lot of different people use different terms for it. But most VCs do not spend their time doing this. It requires a lot of energy and effort. I think the good thing is some more people are dipping their toes in. A few more people are making this an area of expertise, but don't want anybody to get the impression that the majority of VC investors are, focused on space, because they're just not. Yeah. And in many ways, it makes your life easier as a potential, company owner or manager, because there's a smaller number of people that you have to reach out to in order to, really get a sense of who's in the market. So, one of the benefits.
And maybe one other thing I was going to add on, and you'd ask about it, there's, it is a competitive industry in the venture ecosystem, for if that wasn't obvious. And so I think there's been a few funds that have tried to fill that gap as well, in addition to everyone here. I mean, the Lux Capital, Eclipse Ventures, Data Collective, those are probably the three other firms I can think of. The first two in particular, their entire funds are focused on frontier tech. That's all they do. And that includes aerospace, that includes drones, that includes robotics, that includes a lot of things. But they were able to raise multi-$100 million funds, I think, each from limited partners who are all these pension endowments that we all talk about, to focus on that particular slice of the ecosystem.
So I'm going to ask another question, but I also want to be able to take a couple questions from the audience. So if you have a question, we could talk about this topic all day long, but we want to make sure that we're educating you into the things that you're most interested in. So if there are questions, get ready right after this one, which I'm going to ask the typical what should be the NASDAQ question, which is, several new space companies have been around for a while. When do you expect them to be ready for the public markets? So I'll start with Justin, because he's probably the closest to the public markets than either Chad or Mo. Yeah,
sure. Interesting question. I think obviously people have seen the press releases. There's a bunch of space companies now who have started the filing process to potentially go public. What's really interesting about the public markets, and we've taken a lot of companies public over our time, is that public markets can be very finicky, almost week by week. And so you could have an investment that you've made, you've nurtured it for 3, 5, 7+ years, focused on it, worked with management to make it great, and then it's time to take it public. You hit the road, and then the next week, your biggest comparables earnings are really bad, or the market hits a nosedive, and all of a sudden you can't get your IPO done. And then, out of no fault of your own, the
NASDAQ's.
The markets close for a while, and you have to wait for that cooling off period till people kind of re-engage. A lot of portfolio managers, they are making dozens, if not hundreds of investments. So all of the intricate nuances of your one story, they don't have the time to kind of embrace all of them. They also need to understand and manage their portfolio and the technicals of the market. So you kind of can't underestimate market technicals. We talked about timing when it comes to taking a venture company and growing it. Timing out of our control is also a very important aspect when it comes to this question of, are the markets ready for it? My personal view is that, it's going to be, I guess, a somewhat cynical one. If markets are really good that week, then yeah. And if markets are strong that week, then yes. If markets are weak, then it'll be a lot harder.
Other thoughts, Marshall?
Again, we cover a lot of companies in this space, and I think in the next 3 years you might have somebody make it out public. If I had to guess, and not to put Mo on the spot, I actually don't think it's going to be SpaceX, because I don't think Elon wants to probably deal with another public company. Well, Tesla's hard enough, that's for sure. I think it'd probably.
But if he was going to do it, we'd probably know over Twitter, right?
Probably. I think you'll see one of the other players in the space maybe make it out. I think maybe the better outcomes in the near term will come from M&A, but I think the other thing you need to speak to from the public market is just predictability. To being fickle, that's the market's response, but you have to be able to predict and tell the street kind of what your business is going to do. I'm not sure there are that many of these frontier tech or aerospace companies that can really speak to the predictability of their business model. They may have things that they can't control around. Maybe if they aren't the launch vehicle provider, they get bumped off the launch schedule to get stuff up in space. And there's just things you don't always have your own ability to control that I think are unique to this particular industry that might make it harder.
At the same time, you don't want to wait until you absolutely need the money, right?
Yeah.
You don't want to run out of money.
Yeah.
So, because that puts you in a much more difficult bargaining position. And
Sure.
I've seen over my 13 years at NASDAQ, I've seen a bunch of companies who had to do their IPO.
Yeah, Bob, I guess question for you: How does NASDAQ think about a growing industry such as space, and how do you position yourselves to be ready for more companies, whether it's investor education, whether it's client kind of processes? How do you think about that? And how do you guys approach it?
Well, I think we do things like this. First of all, we understand, I think, where the market is moving to. NASDAQ was founded fundamentally on disruptive, innovative, game-changing kind of technologies and supporting them, because back in the 70s, 1971 is when NASDAQ was founded, you didn't have investment banks that were supporting it, and you didn't really have a trading mechanism that was supporting growth companies. And so I think we're most famous for our technology companies, and we have the 5 largest companies in the world on NASDAQ, but the reality is Starbucks is on NASDAQ, and JetBlue is on NASDAQ, and Starbucks didn't invent coffee, but made it an experience and been around for thousands of years. JetBlue kind of revolutionized the way we think about commercial air travel, and we look at new opportunities like having companies from the space economy list with us as being the next natural evolution of what we do. Because at the end of the day, we're a platform, so we help companies raise money, we help companies do secondaries, we help them continue to trade efficiently and investors to come in and out of the stock every day, but we're not going to make a company successful. We wouldn't make SpaceX successful. We haven't made Tesla successful. They've made themselves successful. And we radiate in the glow of the success of the companies that are listed on NASDAQ. And so we do whatever we can, and those start with efficient trading, services that NASDAQ provides, marketing, low fees, other things that we do to help support companies, and at the end of the day, then we've been able to help to transform industries that didn't exist, or create industries that didn't exist, and we certainly think the space economy is one of them, and that's one of the exciting opportunities for us to be here today. So thank you for the question, to allow me to do a little bit of the NASDAQ commercial, but the reality is that...
We didn't plan that ahead.
No, we did not. But we think that this is an amazing space for us, and that's why we've actually had NASA ring the NASDAQ bell twice so far this spring, including on the Friday before the big 50th anniversary of the Apollo space mission weekend, with the NASA administrator ringing the NASDAQ closing bell, because we think it's so important. Before we do run out of time and I get the evil eye from our friends, are there any questions in the crowd that like to ask some of them? Right here? I'll repeat it. Nope, I'll repeat it for everybody.
Well, there are several.
Chad, I'll probably start with you.
Yeah,
okay.
I mean,
well, the question really is around taking frontier technologies that exist, especially in academia, and how those would get commercialized, and whether we see that from a broad-based perspective. And getting it and how it gets to market, and we obviously have different stages of investors here and how they would take it to market.
Yeah, futurist, cool. I want to learn more about that.
You could call yourself a futurist.
Yeah, quite cool. So there is a ton of effort in doing this and commercializing IP from academia. I've seen it be successful, and I've seen it fail miserably, even from like really big storied institutions that lots of really great things have come from. But if you dug in and you saw actually how much effort had gone into actually making that happen, you'd probably be surprised. There are a few examples of it working successfully. In my mind, I think probably MIT is a great example of this. And it's usually the approaches where the school is not trying to be controlling of the thing. It says, okay, I recognize that you developed this here and we should be compensated from that, and we have some small licensing percentage or something that's like super simple. It's well understood, and it's easy to implement, and there's not a lot of questions about it, right? It sort of happens, and then there's a licensing fee paid. I've seen that those work out really well. And then things like the MIT Media Lab, which is founded by a bunch of futurists like yourself, that are doing exactly this, like sort of sitting in between academia and the commercial world, and trying to understand what are we trying to do, what technologies do we need, what's the best that's out there, and the bleeding edge of academia, the people who are researching this, and then how can we bring that to market. So it's not a very simple answer. There's a few things that I've seen work, and it's more about like setting up the institution, like a media lab or something similar, that's acting as a facilitator that understands the two organizations, the two institutions, because they don't necessarily speak the same language.
I think building on that, I think in general, there's this concept of building the organization to speak to other organizations that are complementary but speak a different language is very important for this type of thing, as Chad mentioned. I think very important for, frankly, interdisciplinary work of any kind. And I think that ISS has a whole team that helps interface with investors like us, led by Sven, which is the reason, frankly, that we're here and having this discussion. I know even at our firm, I've kind of helped to recruit and build a team in the last couple of years of 5 or 6 people from the tech and consulting world who sit in Apollo, and their full job is to help our portfolio companies, which tend to be later stage, integrate, articulate, and have discussions with tech venture firms so that they can utilize those technologies to make them bigger, faster, and stronger. That is one of those easier said than done, the devil's in the details type of things. But once you crack that code, there's so much opportunity and upside, and so it's really worth it. And I think you'll see more and more people at all large organizations are going to be tasked with figuring out how to be that translation kit or that liaison tool to other worlds to make sure that things aren't lost and that actually we're able to kind of share best practices and work together.
So I see we have 5 minutes remaining, and
Let's see, we have a number of
oh
questions
my goodness,
from the app.
now we have a whole bunch of questions. This young lady here in the front. Do we have a microphone? Oh, okay.
Yeah, we have a number of questions from the app.
Oh my goodness, am I supposed to have the app? I guess when I landed at 6 a.m. this morning from California, no one gave me the app, but
No, we
we
have
had no Wi-Fi on my plane. That's my excuse.
So we have the questions back here.
Okay.
What can NASA do?
I want to.
She's already standing.
I had this young lady stand up, so if she did all the effort to stand up, I want to let her ask her question.
My name's Claire. I'm a high schooler here for the Junior Space Competition. And
Good luck.
the original person said that sometimes companies will come in with no revenue and they will invest kind of in an idea and a team of people. And I was wondering how to decide who to invest in, especially if you don't have as much scientific background and more from a finance standpoint.
The question is about investing in an idea versus investing in the team, and with companies oftentimes have no revenue, so they're pre-revenue companies, and how do you decide whether you're going to invest in them or not? And I think it's a great one for Mo to start with.
Yeah, I mean, we invest in just teams all the time. A lot of the seed stage investing that we do, it's just that. To your question around, how can you tell when there's no revenue, and in some cases there's no product, sometimes it's just a concept or an idea. I think that's where, we spend a lot of time with the entrepreneurs to get to know them. A lot of, venture, I think someone mentioned earlier, it's more so an art than a science. And it's really getting to know people and building that relationship with people and understanding, what motivates them, what's their mission, what's the mission of this company. And then, understanding technology feasibility, technology readiness, and, time to market. And, like I mentioned, we have a pretty big network within space where we can, kind of pull a SpaceX engineer or somebody from Planet to help us tease some of that out, but it's still a risk we have to take. We take the technical risk if we believe in the team.
The best question that came from the audience. I'll let you choose the one best question of all those ones that came in through the app.
Let's see. What can NASA do, if anything, to help provide clear signals that will entice private capital to invest in commercial destinations in low Earth orbit?
Justin?
Yeah, look, I think what they're doing now with the the funding and the propagation of the ISS National Lab really is the best thing that they can be doing. And I think that mission has come out through a lot of dialogue with the private sector. In conjunction with NASA and ISS in terms of figuring that out. So we actually had the 4 of us and some others actually had a great discussion with the NASA administrator about it this morning. But I think conceptually and the concept and the execution are right on track and are great. And the whole question we have is, what's the next step? What's the next iteration? How do we keep doing this? Because it feels like that there really are, we're heading down the right path in terms of partnering and getting breakthroughs that, the private sector can then take and make their own.
it's certainly something when we come in from a lending perspective, if we see certainly any government agency cutting big checks or being a big customer, but particularly NASA, I mean, they are already a buyer of, almost every portfolio company that we have. So I think we look at that as I wouldn't call that a complete de-risking thing, but it gives us good indicators that the company we're working with certainly has access to the right people, has a product people are willing to put, that NASA is willing to buy. I think something we talked about with the administrator, at least it was from the banking angle that might be interesting, is we briefly talked about the equivalent of the Exim Export-Import Bank that's out there in government. Could you do something equivalent in space in particular that NASA backstops that allows somebody like Silicon Valley Bank or other banks for that matter to come in and be more aggressive from a lending perspective? That probably doesn't work from an investing world, but from a lending perspective, which is a much less costly form of capital for entrepreneurs and companies, we could put more money to work if there was some kind of insurance or backstop of some type. That's something they don't do today, so maybe that's something they could do in the future, but I think they do a pretty good job, to Justin's point, today.
Similarly, these are things we look for, these early public-private partnerships, collaborations with NASA. It's what really jump-started SpaceX back in the day. And then for new companies now, we were talking about the CLIPS program. I think phenomenal to have something like that where startups can start competing for those contracts, early and then potentially lead to something longer term. Helps us de-risk some of these companies, even though it's not immediate revenue, showing that there's some traction working with somebody like ISS or NASA, I think is a big way for us to get comfortable putting in private capital into a bunch of these companies. So I think more of these public-private partnerships, more collaboration, I think it works for both sides, both the American taxpayer and private investors.
Well, on behalf of NASDAQ, we're honored to be here and to be able to partner with ISS and that National Lab. I think Sven and his team put together an amazing panel for all of you. Thank you for all participating today in our Financing the New Space Economy panel. And I want to thank Justin and Chad and Marshall and Mo for sharing all their thoughts with all of you. I know that they will continue to be important players in the investment in the new space economy, and we hope that many of you are become portfolio companies or get lent to or by Silicon Valley Bank and eventually become members of the NASDAQ family. So thanks very much to all of you, and really appreciate it.